still sometimes is the best move you can make. Sometimes the best move you can make financially is to not make a move at all. But again, some of those stocks that I mentioned to you, in fact, my favorite one is a company, the ticker symbol is stock, STOK. I can't remember the name of the company, but it's a pharmaceutical company that I researched that I really liked. And let me see what's the full name of the company. But let me see here, STOK. That's the ticker. Let me see here. Stoke Therapeutics. That's it. Stoke Therapeutics. That's a company that I really like, and I bought a lot of shares of Stoke this morning. So and again, it's not something that's expected to take off next week. It may take a year or two or something like that, and that's just kind of how stocks operate. Now, what I'm going to do is answer a few of your questions you guys submitted in advance. One question is, let's see here. Latricia says, "I'm a disabled housewife and author in your Prime class. The only platform I use to invest at $25 a week is Stash, which is at $500 right now. I want to invest 5,000. Could you give me an example of how I could begin using it to generate $2,000 to $5,000 a month?" Okay, so let me just say that this, Latricia, it's really, really difficult, if not impossible, or close to impossible, to invest just $5,000 and make $5,000 a month, or even $2,000 a month. That would be a massive ROI, and I'd be lying to you if I told you there was an easy way to do it. It doesn't mean it's impossible completely. You may luck out, and maybe there's a business that could be started. The only time I've ever seen somebody take, say, a $5,000 investment and turn it into 5,000, 2 to 5,000 a month is by starting a business. And that's where you find a need that people have, and you fulfill that need, and you use your 5,000 to kind of get things started, and then you just bootstrap your way to growth. Bootstrapping your way to growth basically means that whenever you're making money, you pour it back into the business, and that was how I created several businesses like that. But that does take work, right? So it doesn't mean you're not investing financial. It doesn't mean you're not investing. It's just that instead of investing financial capital, you're investing a lot of sweat equity and stuff like that. So I think with $5,000 a month, a more reasonable monthly ROI could be maybe $200 or $300 a month, something like that. That's doable in the Prime program. If you go to drboyceprime.com and you look at some of the what I call Dr. Boyce money makers, which are the stocks that I generate my weekly income from, then that's all right there. So you can definitely take a look. You can also use margin, but you got to be real careful with margin, because margin means that when the market goes down, you're going to get a margin call. And margin calls mean either you have to come up with more cash or you have to sell your stock. So if you're dealing with really volatile stocks, and those are the kinds of stocks that we were first introduced to in the Prime program, those really volatile stocks that pay the most income are the ones that you have to really work hard to manage too. So they're like wild broncos. So with a wild bronco, you've got to really control that thing. So one of the things that we do in the class is we talk about buying your put options consistently to protect your investment. We talk about having cash available so that you can make the margin calls. We talk about reinvesting so you can actually grow the base of the portfolio, stuff like that. But there are some stocks in there that can generate income. Keith says the Prime program has been a blessing. Dr. Boyce and Dr. Alicia has been a blessing to our family. Good, good. And I'm glad to hear that, Keith. And the reason I like your comment is because I like the fact that you use the word family. One of the things I want to make clear in the Black Business School is, we can't do it. If we could do everything for free, we could, but we couldn't do it because that would require us to go get government money or corporate sponsorship, which would distract us too much from the mission. Unfortunately, we live in a world where we're being pro-black is kind of seen as radical, and it's just not. We don't think it's radical, but we think loving yourself is kind of natural. But some people think it's like, oh, well, you're being too black, and that's a problem. So we don't want to deal with that. So we have to raise our own money because freedom isn't free. But the thing is that we're not greedy though. So we don't need, if you have 3 people in your family that want to join the Prime program, then share one membership. We just live on the honor system. We just ask, don't abuse it. Don't do anything outrageous. But if you have family members that want to come to class too, bring them to class. Absolutely. And also, remember, take advantage of your Prime membership. There are lots of benefits in there. There's tons of stuff in there on stock options. There's the financial therapy sessions that Dr. Alicia does, which are extraordinary because money mindset is really important. If you don't have the right mindset, it's very difficult to build wealth. And so the best thing I've used in my life that's helped me become a better man and a more successful man is talking a lot with my therapist. I have two therapists, my wife and my therapist that I pay. And then I actually make that three. I have a third one, which is for our marriage, in order to make sure that we learn how to properly communicate and we avoid any of the marriage landmines that cause so many marriages to fall apart. Why is that an important investment strategy? Well, because one of the biggest wealth killers is a divorce. Now, if you ever want to go broke, go through a messy divorce. Not only will it drain you of all your money, but it's going to drain you of all your energy, and which means that you can't even go make money because you're going to be so mad and stressed out and frustrated and everything else. Spend all your time arguing with your spouse, and so harmony and peace, it leads to prosperity. There's no country that has ever financially prospered in the middle of war. Never, never has been. Right? You look at Europe. Go look at videos of Europe, wealthy, prosperous Europe. Look at Europe during World War II. Buildings were burned down. Kids couldn't go to school. There were no, there's no arts and sports and none of that stuff because everybody's scared, everybody's dying, and things are being destroyed, right? But during prosperity, you look at Japan, and look at Japan now and look at how prosperous it is now. But then go look at what Hiroshima looked like after they dropped that bomb. So the idea is that in your own life, that analogy does apply. When your life is a mess, then your wealth is probably going to be low. So the best way to build wealth is to clean up your life. Kind of, make adjustments with some of the toxic relationships. If you got some health issues, maybe work on some of that, mental and physical health. Get the right mindset for wealth. And so that's what those financial therapy sessions are for. So if you log into drboyceprime.com, you have access to a lot of those recordings, a lot of those money mindset sessions, and in the support groups and everything else, in addition to all the investment material that you have, which is pretty voluminous. So feel free to take a look. Picola Brown says, okay, my E-Trade account dropped 3K yesterday, and my Robinhood is sending me margin call notices. Like WTF, but I'm cool. You always speak of market tolerance, and man, oh man, I'm approaching mine. First time ever, I thought about selling everything. Forever a student, Picola Brown. Well, I love you too, Picola. And let me just tell you, the feelings that you're having are not uncommon. What you might want to do is be very thoughtful about your risk tolerance and how you feel about sort of, the ups and downs. Some people can deal with it. It's like riding a roller coaster. Some people ride a roller coaster, it doesn't bother them. Some people, they start vomiting, if it gets too wild. So what I want you to understand definitely is that investing is never a one size fits all kind of thing. It's never a sort of thing where a person can tell you how to invest and it's going to always work for you. You have to kind of say, like, okay, I don't know if I really like this feeling. And this is why, again, this is why we create the whole Black Financial Therapy Department, because we notice that feelings are huge when it comes to making your financial moves. That article my wife showed me blew my mind, where she basically said that traumatized people who had trauma as children, namely Black people, that they were more likely to abandon the buy and hold strategy when there was a decline in the stock market. And then when they abandoned the buy and hold strategy, pay attention now, this was another level of trauma. This is like level 2 trauma, which leads to attachment disorders. Attachment disorders are things that make you afraid to attach to things, right? Like when people get scared in their relationships and they never want to date again or whatever, right? And so what is this saying? Well, this says that what this made me think about when she was talking about it, and I was just listening to her. I said this makes me think about 2008, where the billionaire John Rogers wrote an article where he basically said Black people probably lost $1 trillion in the 2008 market crash because when everything started crashing, we ran for the hills. We became the track stars, that run away, whenever things get too hard. And as a result, we missed out on the recovery. So many people got super rich when the stock market recovered in 2009 and 2010. I mean, insanely rich. And a lot of us were not a part of that because we were on the sidelines. So it was like gentrification. We sold cheap. We sold out cheap, and then somebody bought it up, waited out the storm, and then made all the money when things got better. This is a common theme. This happens all the time. So what I will say is I'm not going to say anything about your specific strategy, Picola. I'll say certain things like, remember, with risk, you've got three choices when it comes to risk. One, you could just assume the risk. You could just take it on and just say, you know what, it is what it is. I don't care. I'm not thinking about it. Another one is you can avoid the risk, which means you could just say, you know what, I'm not messing with that. I don't want to be in that industry. I'm going to move my assets over here where where it feels a little more comfortable for me. And the third is you can manage the risk. Manage the risk is in the Prime program. We talk about buying put options. We talk about making sure you have cash available to meet those margin calls. Maybe we talk about diversification, not putting all your money into one space. For example, you had that one stock, Madrigal Pharmaceuticals, which, and I have to give credit to James, who's a student in the class, who actually brought that stock to my attention. By the way, that's something you can do in the class. You can ask me, you can bring a stock to me and ask me, and I'll look at it, tell you what I think. So James did that. He says, well, what do you think about this company? He said, this company seems to be paying a lot of cash in its options, in the selling of options. And I looked at it and I said, wow, these numbers are really big. And I researched it, and I just told him what I saw and what the risk factors probably were, and I liked it so much that I invested. And I sent you all a text and said, this is something that I'm investing in. I don't give investment advice like that. I just tell you what I'm doing. And that stock went crazy. That stock went up over 200% in a weekend. And so I think some of y'all literally made over $250,000 on that one stock alone, because some of you have big positions in those stocks. Some of you have smaller positions. But so that's the good side of it, right? That's what happens when you're consistent and you're patient. You get those big wins. Those big wins are few and far between right now because the stock market is kind of crazy. It's just a really hard market. It's going to be like that until the Federal Reserve stops increasing interest rates. But but the darker side of that, though, and that's what I warned James about when we were talking, is I said, look, this stock has a lot of jump risk, which means it could plummet at any moment. If it's a pharmaceutical company, chances are they got a big clinical trial and everybody's betting on the clinical trial. So just be ready. Get your put options in place in case this sucker plummets. And so he got his puts, and he took all his precautions. Like, he went to play football, he put his helmet on, and next thing a lot of money got made. Right. So there are opportunities out there like that. And I like selling options because I think it's an easy way to make money. Imagine this: if you had a child and you've been saving up your stock portfolio, and you want to give your child a gift that allows them to make more money than they would make on a job, you give them some cash, and or show them which, buy some stocks for them and tell them that those are your stocks. You own those stocks, but you can actually sell the options on the stocks. You can sell the options every week and make the money. And we do rollovers. The stock goes up too high, we'll roll it over or whatever, and that'll be your income. I talked to my son about that, and I was like, yeah, you can make more money like this doing no work at all than you can make actually getting a job working for a company. But I'm only going to do this with you if you show me that you have the discipline to invest. Investing requires discipline. It requires picking a strategy and sticking with it. You cannot flip and flop and run and dip and dodge and maneuver every time something changes, because that will just drive you insane. You will be a cat chasing its own tail, and it'll only put you in the crazy house. So pick a strategy, and that's it. Just, what life are you about? Are you about the conservative life? Then okay, fine, be conservative. Just accept the fact that you're going to be safe, but you're going to have a little FOMO. You're going to see some stuff happen. You're going to say, "Dang, I wish I was invested in over there because they're making a lot of money right now." But that's okay. You chose that life. Now, if you want to choose the risky life, then that means you're going to have a lot of FOMO. That means fear of losing out. That means you're going to have situations where you're going to get your butt kicked. You're going to end up looking like Cathie Wood. Cathie Wood right now, if you look her up, she's a very smart investment advisor. She is looking like the biggest idiot in all of finance right now. And in 2020, in 2020, she looked like the biggest genius. Now she's looking like the biggest idiot. But I believe that in a year or two, Cathie's going to look like the biggest genius again. Because that's how people are. People just remember what recently happened. So what do I think about ARK? That's a good question, Otis. I love ARK. I love ARK. I love Cathie Wood. Um, I think sometimes she's a little too optimistic about certain things. Like, I think that there are more problems with Tesla than she's letting on. But I believe that when the economy recovers, when the recession talk is over and the Fed stops increasing interest rates, ARK is gonna go kaboom. I think if you can just hold your breath or hold your nose for a few years, like, just make your consistent investments and look away. I think by 2027, 2028, 2029, 2030, ARK is going to be one of those funds where we look back and say, gosh, I wish I'd put more money into that back in 2022. And I know when I say 2030, it seems like that's a long way away. That's what happens, right? I'm old enough to even remember. Anybody remember we used to hear the song "I'm a Party Like It's 1999," and you really thought of 1999 as like way off in the future, like And now we even say it now, like I'm a party like it's 1999. Then you're like, wait a minute, 1999 is ancient history. Oh my God, I'm getting old. What is going on here? It freaks you out. It really freaks you out. And if you're not old enough to feel that way yet, just don't worry, it's coming, I promise. But so when I talk about 2030, I need you to be able to visualize that though and understand it's hard to think about 2030, right? Most people, this is your opportunity to get ahead of the rest of the world. Most people are not thinking about 2030 right now. They're focused on 2023. That's it. 2023. In 2023 I'm gonna do this. 2023 I'm gonna lose weight. 2023 I'm cutting off all the haters. And 2023 I'm gonna level up. 2023. Man, 7 years. Thank you, Pacola. 7 years will fly by like nothing. Why do I know this? Well, let's do an experiment. How many of you remember 2016? Anybody remember 2016? Like, I remember 2016 like it's yesterday. 2016, I was sitting in the same chair doing the same thing, talking about the stock market every day, just like I'm doing right now. In 2016, a few things were different. I think Trump was starting his presidency. Whatever, a few other things, but for the most part, 2016 isn't that much different from 2023. But if we had started talking about 2023 back in 2016, it would have seemed like it was way off in the future, like it's never going to get here. But imagine if you could see 2023 back in 2016, and let's say that you had back then said, okay, I'm going to invest, $50 a week in Bitcoin consistently. I don't know. Let's see what would have happened. Let's look at Bitcoin. Let's look at the price of Bitcoin. Let's see here. Price of Bitcoin. So let's say that New Year's Day 2023, we would have invested in Bitcoin. So let's just, I don't even know what this is gonna look like. So I'm gonna share my screen. Give me a second. And I want to look up, and if you can't see it, that's okay. I'll just describe what I'm seeing on the screen. So let's go back. So so today's what? January 3rd, 2023. Okay. So let's go to January 3rd, 2016. So now Bitcoin has just fallen like a brick, right? I mean, it's terrible. Oh my God, $16,649. Now let's see what Bitcoin would have cost us on January 3rd, 2016. Let's go back. Let's keep going. December, October. Okay, July, May. All right, here we go. There we go. This is close enough. January 1st, 2023. Bitcoin was $435.40. $435.40. So in that amount of time, let's see what that ROI is. Let's see ROI. Let me see if I can calculate. Let me let's see. Let's do it approximately 16,649 divided by 435. Okay, that's 38. Okay, 38x. So 38. So your investment will be 38 times higher. So let's see. Might subtract 137.27, and then that's Gosh, it's so what's that? 3,000%, 3,800%. Is that right? Did I get the math right? Did I say that right? Yeah, 3,800%. So imagine, so let's really look at it. So does everybody understand how massive that is? First of all, like I know sometimes I talk too fast and I don't want to lose anybody. Does everybody understand that could have been your move? Like that's the move that gets you out of the hood. That's the move that puts you in a position where you could quit your job, right? That's the move that would have changed everything. Buy Bitcoin when it's 435 with your extra money. Maybe think about this. Think about how much money since that time you might have spent going to the mall, money you might have spent going out to eat. Think about all the money you might have spent going on trips, money you might have spent on things that you have nothing to show for, right? This is the magic of investing. This is why even being a bad investor is better than not being an investor at all. Because if you invest your money and it goes badly, maybe you win, maybe you lose. And typically you won't lose much if you invest properly. But if you don't invest at all and you spend all your money, then you have a guaranteed rate of return of negative 100%. Your ROI is guaranteed to be negative, because you spend that money 5 years from now, you'll probably have nothing to show for it. Even if you buy something like a car, 5-6 years later, you're probably not. There's a good chance you may not be driving that car, or at the very least, that car you're driving is going to be worth a lot less, and you're gonna have to go out and buy another car. So another way to look at this number, and I want you to kind of I want to put it into context for you so you can understand that these multi-million dollar opportunities are all around you right now. You just have to take the time to gain the wealth consciousness to go look for them. But imagine this: imagine you bought a house in 2016 for $435,000, and 5-6 years later, I don't know if it's 5 or 6, I guess it's, or is that 7? Maybe it's 7. Sorry, 7 years later, that $435,000 house is worth $16.6 million. That's the move that would change everything, right? So, and it's not as if you didn't know about Bitcoin in 2016. You probably just didn't invest in it. In 2016, Bitcoin was present. There were exchanges you could have easily gotten onto, throw in some of your spare change, took some of the money, maybe the same amount of money you might spend on a car note, and put it in just to see what would happen. And it would have turned into something greater. And even deeper than that, there was a black man on the internet who was begging black people to buy Bitcoin back in 2012. He was telling everybody, he said, there's this thing called Bitcoin that's only about $1.50, $2. This is going to go up in value. You should buy as much of it as you possibly can. This guy bought as much Bitcoin as he possibly could. Now he is a billionaire with a B. So these opportunities are around you. That the bad news is that you missed that one. You unless you have a time machine, you can't go back and get that money. The good news is that the same way there were opportunities around you in 2016 that panned out for 2023, well, there are opportunities around you in 2023 that will pan out in 2030 or 2029 or 2031 or whatever. So I'm encouraging you to go ahead and gain the wealth consciousness to begin that process of practicing living in the future. Practice thinking about what little things you're going to do right now, little investments you're going to make consistently that aren't going to distract from your standard way of life, that are going to position you so that when all this is over, you're going to be one of the people that ends up winning. I can guarantee you that this will be over. All I do with my spare money, I have a habit. The same way people have a habit of buying shoes, my habit is buying stocks. As a black man, I get a lot of pride in ownership. I get a lot of pride in positioning financial security for my family. That makes me feel good. So when I get extra money, I go shopping for stocks as much as I can. And what I basically do is it's just like I buy it and I forget about it, and I sit there and I just own it. And then years later, I look back and I say, "Wow, this stock made a 800% return. I had no idea. That's awesome." Right. So get in that habit of doing little things, because that's where your wealth comes from. Your wealth comes from your little tiny repetitive habits. That's what makes you wealthy. Just the same way, if your tiny repetitive habit is to eat fatty food, then you're going to get bigger. You're going to keep gaining weight. And then one day you're going to look down at your stomach and realize how gigantic you've gotten, right? A lot of us have gone through that in a negative way. Well, the same thing is true with fattening up your bank account. If you just constantly feed it, with little investments here and there on a regular basis consistently, then you're going to notice your bank account and your wealth level growing. But right now, if you're looking at paper wealth, or as in non-realized wealth, it's a really depressing picture. And it's not just you. Mark Zuckerberg, I think, lost $100 billion this year in his personal wealth. Elon Musk lost $200 billion in his paper wealth. But the thing is, even when your paper wealth drops, you still own those assets. So, if you look at things, so you can look at things from a wealth perspective, which is important long term, but also on a short term basis, income based perspectives can be valuable too. So with my options portfolio, and I have several different portfolios, a medium term, long term, and then I have my income generating portfolio. With my income generating portfolio, I'm only paying attention to my income. And that's my options. That's what I do. Like, so in the Prime program, that's what we're talking about. We're not really talking about these investments that are going to just necessarily pan out and create a ton of wealth long term. I like to look at stuff that's just going to help me get income while I still own the asset, that allows me to pay bills and do whatever I got to do. And then what happens is that as the asset price drops, I just try to buy more. So I'll take some of that income, flip it right back in and say, okay, well, the stock dropped by 5% this week. It bothers me. But now I'm going to buy another 100 shares because it's that much cheaper. Because at some point, this is going to come to an end. When all this comes to an end, then your new problem isn't going to be declining asset values. It's actually going to be increasing asset values. So if you're in the prime program, you're going to have a lot of rolling over to do in order to avoid the capital gains taxes and all that stuff. And then that'll be a new strategy that you have to apply to kind of deal with a different environment. So right now, this market is still flushing out a lot of waste. Crypto is just in the trash right now. I don't think it's going to stay there forever. Bitcoin's resilience is a huge bright spot. That tells me Bitcoin could be the investment of choice right now and even beyond this time period. And there's a lot of opportunity out there. Now, let me answer a couple more of your questions and put your question in the Q&A section if you have a question for me. And by the way, if you want to join us for Prime class, we're going to meet again. We're going to meet later on in the week. Just go to drboyceprime.com if you're unless you're already in there. Natasha White says, Happy New Year, Dr. Boyce. How do dividend mutual funds work? Well, they work just like anything else. Any other company pays you dividends. When they give you the dividend, you have a choice. You can either receive the money or you can just reinvest it. I tend to just reinvest my dividends unless I need the money or unless the amount is substantial enough that it makes a difference. Reinvestment works. The reason people like dividend paying stocks during a downtrending economy like this is because dividend stocks give you a guaranteed rate of return. Companies are very reluctant to cut their dividend. So a lot of times they'll make sure that you're getting money, consistently, even when the market isn't doing that well. So they'll literally go borrow money just so they can make sure they maintain their dividend. Because when a company drops their dividend, it really hammers the stock price because they're kind of admitting that they're not strong enough financially to kind of handle their expectations. Let's see. Mr. Jan Jansen says, I haven't made any money in my Acorns account since I opened it, or when I do, I don't withdraw anything. Am I required to report the existence of that account to the IRS? Talk to your accountant or your tax professional about that. First off, that's really important. Second of all, if you haven't made money and you have losses, then the reason you want to report that to your tax professional is because they can use those losses to write that off against your income, especially if you have an LLC. So don't assume that it shouldn't be mentioned. It could actually be mentioned in your favor. For example, a lot of you I don't know if you saw that when Donald Trump released his tax forms finally, and it turned out it was really interesting because, first off, Trump just, if you look at his income isn't that high. It's stunning when a guy is supposedly worth 3.3 billion and his annual income is either negative or a few million bucks. But that's very deceptive. Trump really does have money, and what he does also have is he has a great tax strategy where he gets these losses on paper, he writes them off as much as possible, and then he minimizes his tax bill. I think Trump paid in 2016 and 2017, he paid about $750 in taxes. And I think one year, I believe in 2020, he pays $0 in taxes. So, some of you were outraged by it. Some of you thought it was nonsense and BS. Some of you were just looking at it and saying, well, I want to know how he did that because I want to do that too. And a lot of it really starts with thinking of yourself as a business from the very beginning. And so, for example, in the book that I was telling you guys about, my new book, one of the things I really want to impress upon you is to think of your family as a business. Think of your family as an LLC. I think every family should have an LLC. I think it's worth your time to kind of put time and energy into it, to figure out ways to generate income from it. I think it also helps if you have economically trained people in the family who are committed to the family, who are disciplined and understand what it means to do what's best for the family. And you can have family business meetings and just kind of decide what you want to do with your LLC. And the beauty of it, too, is that if you think of your family as a business, which it really is, it's a multi-million-dollar entity if you see it that way, then that means that you literally, theoretically, could write off every family reunion you ever have for the rest of your life. Anytime the siblings get together and they're doing business properly the way they're supposed to, having business meetings and making plans for the future, helping each other make money, then you can write that off. You can actually reduce that tax bill. You can go on that vacation at a discount. You can say, hey, everybody, let's meet in Barbados and let's have our family business meeting in Barbados. This is how the Trumps operate. And one of the things that you can pay attention to if you get past the politics of it all is that if you look at the net worth of every single one of Trump's kids, all of his kids has a net worth, I think, of at least like $50 million. So, kind of think of your family as a business. That's what you deserve. These other families do it. Why can't you do it too? And so, let me look at the next question here. The next question that I see is here we go. Lola Marie says, my husband and I started with purchasing shares of stock on our own in 2016. However, we had no clear understanding of which platform to choose, so we joined them all: Acorns, Robinhood, Ellevest, etc. My question: how can we combine all of our stocks onto one platform? Well, one thing you can do is do it a couple ways. You can either most of the platforms actually allow you, if you call them, you can say, I want to transfer my assets to blah, 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 and they will help you do it. Now, the downside is that some of the apps don't make it as easy as others. Some of the apps make it just downright difficult. I think I tried to transfer some money from Robinhood to my Merrill Lynch account, and it just wasn't as easy as I wanted it to be. So I was kind of upset about that. So I had to kind of liquidate some investments and move the money over, which creates, tax implications when you sell assets. And so really, you could, go with a strategy where you pick the one or two that really matter to you the most and commit yourself to making all your future investments in those two accounts. And then with the others, maybe phase them out over time. Maybe, once every few months you sell some assets and move some money over, or you just leave it there and just don't add to it. But with most of them, though, if you just simply call them and say, I want to transfer all my money over to my E-Trade account. If you talk to E-Trade and talk to the original app that you're transferring the money from, there's a procedure. They know how to talk to each other. Like, so if it's established institutions like Fidelity and E-Trade, they have an easier process. Whereas Robinhood and the newer apps, they're not as good at that kind of thing. So just kind of be mindful of that. All right. So let's see here. Jacinta says, hey, Doc, are there any gold stocks you like? Not really. There's the Gold Trust ETF. I think the ticker symbol is GLD. Gold has not really been a great investment in the last decade. I'm not a big fan of gold, to be honest with you, Jacinta. I think maybe owning a little bit just for diversification's sake might be okay, but I don't see anything precious about being invested in gold, to be honest with you. Also, what is the difference between over-the-counter stocks and other stocks? Over-the-counter stocks tend to be smaller companies with less trading kind of happening around them. The market is not as fluid and as liquid as the bigger companies. So that kind of ends up. So I'd be really cautious about over-the-counter stocks. I'm not saying don't invest in them. Some of them are okay. But I think also if you invest in the stock, I would ask yourself, why are you invested in the stock? A lot of people will buy a company because their buddy told them to buy that stock. And unless your buddy has, some sort of credentials which tell you that they know what they're doing, I wouldn't just go for it just because somebody said that it's a good investment. I have a process that I use. Actually, it's a method. It's a patented method called the Dr. Boyce method, which came from, the fact that I have a PhD in this. And actually, so if you actually want to take a look at it, feel free to go to thedrboycemethod.com, thedrboycemethod.com. It's a simple 11-step system that I use to decide if a company is a good investment or not. Again, but there's other ways out there as well. So feel free to take a look at both. Is DBA a good stock to invest in? Angela, I can't research the stock like that now, but if you log in at the blackstockmarketprogram.com, just leave the question and I'll go research it for you. And I'll be happy to come to class and answer that question next week. Ramona says, I started with Boaz Bikes in 2020 and I lost, I believe, $200 was invested. However, the company, what was the website? Chanel, could you type it in? It's thedrboycemethod.com, thedrboycemethod.com. Don't forget the THE. I believe my $200 is invested. However, the company has now turned over to a company called Start Engine. Start Engine's asking for more money than the original amount. If Boaz Bikes is a publicly traded company, they should have a process for getting you ownership in this new company. If it's not publicly traded, Ramona, if it's a private investment, then that would require you to, I guess, get in touch with the people that you made the investment with. I've never heard of Boaz Bikes. Let me see here. Boaz Bikes. Here we go. Oh, it's a startup. Yeah, yeah. That's a different kind of situation. And let me just tell you about investing in startups. If you invest in startups, be ready to wait a long, 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 long time before you can get your money back. Take it from someone who has learned the hard way. Um, I invested in a couple of startups. One of them, a company called TribeVest. I've gotten so far a 2.5x% return on my investment, meaning 250% ROI. Good investment, great. But it'll probably still be several years before I actually see that money. Okay. And by the time I see it, it could be even higher than 250%. Um, but there are other stocks I've bought that are publicly traded, that are highly liquid, that are readily available, that also gave me a 250% return. And I was able to get the money just like that if I needed it, And and I will say that, there are people who disagree that cash is king. They say cash is trash. I think that's BS. I think that this market showed you that cash is very important. Access to cash, especially if you are either a highly active investor that needs that liquidity or you're just a person trying to pay bills, cash does matter. The access to cash matters. And so, in fact, in this market, cash did better than stocks, you know. So I like liquidity. I like liquid markets. I like being able to buy my stock today, and then if I need to sell it tomorrow, I can get my money right back. With the startups, you might be waiting a real long time. So if I invest in a startup, it's usually something where I know the CEO really well, and I really want to be a part of it because I have a passion and a belief in what they're doing. Um, I don't do just random startups because there's other places you can put the money that I think are much more effective. Even buying real estate is better in my view because at least with real estate, I can enjoy it in some way. I can go live in it, and I don't know, just real estate. You can actually like this house. We invest in this house, but it's our house. I invested in building out my basement, and every day I get to love and enjoy my basement. Whereas these startups, like it can feel like a black hole for your money. So I'm not telling you not to do it. I'm just saying think that through. Think liquidity through. What is liquidity? Liquidity is very simple. It is how easily can you convert that asset into cash if you need the money. Is there a commercial real estate stock? Yes, owner. If you log in at the blackstockmarketprogram.com, leave that question for me, and I can find some for you for next week. But there are tons and tons of commercial real estate stocks and real estate ETFs and all that. Anthony, what are your thoughts on tax loss selling at the end of the year? If your accountant likes it, then I think it's a great idea. There are rules that you have to follow, but just make sure you follow the rules. And if you do that, then you should be okay. Rarick, why do you think the healthcare industry is doing, or why do you think it's doing these hard times? Or how do I think it's doing right now? I think healthcare is actually pretty strong. I got to double check. The healthcare, I mean, and people are only going to keep getting sicker. The population is getting older. Everybody's getting cancer. I mean, my gosh, it's crazy. I got several people in my family that have cancer right now, and I think it's only going to keep getting worse. That's just the truth. Jacinta says, I appreciate you. Well, I appreciate you too. Thank you for the kind words. Last two questions. Rarick says, how does rising wages hurt the economy? I don't think it necessarily does. I think that the politicians create a narrative that, higher minimum wages and stuff like that are going to ruin everything for everybody. And I just don't agree with that. I think that's the ugly, dark side of capitalism that I'm not a fan of. I'm never going to sit here and say I think that black people should be capitalists because I think capitalism is it's kind of it can be a very dirty, greedy system. But I think you can learn from it. I think free enterprise is beneficial, developing businesses and all that. You need that, right? So I don't think we should all run out and become socialists and communists either. I don't think that's the winning solution. A lot of our political movements, the civil rights movement, even the Black Panther movements, were heavily infiltrated by communist socialist ideas. That's why you would hear them calling each other comrade and stuff like that. And I'm not saying that that's bad. I'm just saying you got to be really careful because communism, Marxism, and socialism has a lot of problems too, just like capitalism does. And black people, in my view, we need a little bit of nationalism, which might come in the form of ownership of businesses and assets so that we can protect our culture and protect ourselves from all the challenges that are out there. We're kind of going through what Jewish people maybe went through in America, where you don't really have a lot of friends. So what the Jewish community did when their kids couldn't go to the same schools, and they couldn't get certain jobs, and they couldn't even shop in certain places and all that, was they said we want to create a lot of quiet power through ownership. So they said we want to own this whole industry of Hollywood, but we want to be phantoms. We don't want anybody to really know that we're pulling all the strings. That's why they got so offended when people like Kanye or others, or Kyrie or whomever, has something to say that they don't like, or draws any attention to how much they actually own and control, because that's been a standard policy that they've kind of embraced for a very long time. That, look, we want to own everything, but we don't need anybody to know that we own it. We don't need to be loud. We don't have one big Jewish leader who's out on TV every day. There is no Jewish Al Sharpton. There is no Jewish Jesse Jackson. There are no Jewish rap stars who claim to represent the whole community. And that's by strategy. So I personally think that there are models that can work to our benefit, but I think open-mindedness is incredibly important, so that you don't have your good ideas get undermined and ruined by someone else's agenda that was already preconceived. Now, OMG says they have the ADL. Yeah, they do. Right. And who runs the ADL? Can you name the person who runs the Anti-Defamation League? No, you don't know who that person is, because it's institutional power. And that's something that I think we have to really, sort of impose on our kids, that you got to develop institutions. Like the Black Business School is an institution. I'm leaving 80% of my wealth to the Black Business School. I've invested about $15 million over the years into this HBCU, because I believe that this form of education is better and more effective than almost anything out there, because it's lower cost, it's higher impact, it's more flexible, and it's specifically focused on Black people. It answers to no one, and it allows us to specifically solve our problems with leading experts in a way that we can go wherever the solutions lie. We don't have to be stuck with Democratic solutions or Republican solutions. We just find the solution that works. So that's what the frame of thinking is, and I think that this is effective. All right, so Rarick, Rarick. Okay, last two questions. Okay, no more questions. These are my last two. Rarick, what indicators? Let's see here. What indicators that can let you know if the stock market is starting to stabilize? Rarick, is really hard to tell, but it's hard. It's hard to tell, guys. Because you can't really predict market volatility that well, because you have a lot of what they call black swan events, which is just unknown unknowns. Like, you don't know. I mean, for all we know, tomorrow there could be a big announcement on the war in Ukraine. If that war comes to an end, the market suddenly rallies. There could be something bad about to happen that you don't know about. So it's really hard to know exactly. There are measures of whether or not investors feel stable or not. That would be things like the VIX, the fear gauge. They can measure how frightened investors are. They look at things like consumer sentiment. How do consumers feel? Are consumers feeling, confident, or are they feeling nervous? They also can look at the amount of what they call information dispersion, meaning how many pregnant moments exist in the market. So, for example, if the Federal Reserve doesn't give good guidance on what they're probably going to do, then that might create some volatility, because everybody's guessing about what's going to happen. Whereas if they're clear and they say, hey, we're probably not going to increase interest rates, so let's shut this issue down, then that might smooth the market out, because the market says, okay, we know what's going to happen. It's going to be okay. So there are some ways to sort of see that, but it's really kind of hard to tell, to be honest with you. That question is a deep question and difficult to answer in a definitive way. The last question: what's the minimum amount you need to get started selling call options? The minimum amount you need 100 shares of stock. So if it's a $5 stock, you need to own 100 shares of that stock, which is $500. If it's a $20 stock, 100 shares costs $2,000. The reason I like selling stock options is because I think it's the best and easiest business that there is out there. You can take, $2,000 and you can generate, a couple $100 a month in income, which is pretty good. Or if you think about it in terms of real estate, there are stocks that I own that, let's say I put $100,000 in that stock, instead of buying $100,000 property. And let's say I'm making $7,000 a month off that $100,000 stock. That's pretty awesome because there's no real estate property I could buy for $100,000 is going to give me a $7,000 monthly ROI. So there are stocks right now that we talk about this. If you're in the Prime program, I share with you guys what I'm doing every single week with that, and that's why I think selling stock options is great. Not just because the income is good, but because it requires no work. This is the money that I make literally by punching digits on my phone every Monday, and that's when I sell my options. I get my money; it goes right into my bank account. I push it over to my wife, and I say, "Okay, honey, here's the money. Go pay the bills." And it's the easiest way to make money that I've seen. But it does require the building of a capital base, and it does require some strategy. It requires some risk management. And again, if you want to join the Prime program, just go to drboyceprime.com. I think if you use I think there's a code. I think you use the code word Dr. Boyce, all one word. You can get 20% off if you're not in there yet. But I think it's worth taking a look at because this is something I actually do for myself. So it's not something that I'm just teaching in theory. It's something that I actually do. So it's drboyceprime.com, drboyceprime.com. That's the URL. All right, everybody. Well, have a good day. And next week, we're going to meet for stock market investing class. So if you want to see the recordings of all the classes, just go log in at theblackstockmarketprogram.com. So if you can't get enough and everything you've heard today has been fun and you want to just keep the party going, just know literally every single lecture I do is recorded. You could literally watch probably 3,000 hours of this kind of content right now, right in that space. And it's a great way to learn investing. It's a very conversational style of learning. It's kind of like how your dad might teach you just by talking to you about something every day. Eventually, you're going to be an expert at it because you're going to have a lot of conversations. So that's my goal. I want to just be Uncle Boyce or whatever and just talk our way through it without it being overly formal, because that's the best way to learn anyway, is to incorporate it into your life to solve real problems that you actually have. So just log in, theblackstockmarketprogram.com, THE, and all that's right there. So have a good day, everybody. And thank you, Chanel, for covering the class. I appreciate it. And it's very good to see you. And I'll see you guys next week, next Tuesday at 11 a.m. Eastern. Be good. Bye-bye.